The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, come on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN. Don't forget that you can listen to us anywhere in the world on your mobile phone on TFNN.mobi. Let's check out where the markets are at right now. We got the S&P is up 9 points on the day. Right now we got the Nasdaq up just 3 and the Russell up 2. Dow currently up 55 points with gold up over 25 points right now, almost 26. We got silver up over 2%. So silver moving huge today. Of course, we have the NFP numbers. We'll be talking about that and the straddles on that. We got copper is up 1% on the day. We got oil right now is down almost 1%, down 87 cents. Natural gas is down 2%. So natural gas usually a big mover. And today, like any other, down a huge amount. We got corn right now down $5. Soybeans down just a couple dollars. Euro dollar's up 107 pips on the day. Pound dollar up 91. Aussie dollar 51. Euro yen up 93. Dollar yen up just a mere, dollar yen is now down 9 pips. Got pound yen up 76. Dollar CAD is down 15, and dollar franc is down 74 pips on the day after just a massive move on the non-farm payroll. So we had that unique day, right? So we had a non-farm payroll happening at a time when we normally don't have it, happening on Tuesday. It's a lot of pent-up demand and a lot of things moving. And so I want to go in and look at that and walk through that trade with you. And sort of just, show you. We talked about it yesterday. I went through and talked about doing a straddle and how you buy a spread above the market, you sell a spread below the market. You want to know what markets to focus on. You want to know sort of like where to set profit targets. And I got some questions. I've got a lot of responses from a lot of traders that did that trade, had a lot of success on it. So, of course, I did it this morning as well. And it's pretty cool. My daughter, her school had a thing called Donuts with Dad. And so it's where dads come up early in the morning. And, they have donuts with their kids, and it's in the library. And it's really a book sell because they figure if you show up with donuts with your kid's going to ask you, and you're going to have to say yes. And it worked because I think every dad was buying their kid books. But, my daughter loved it. It was a lot of fun. But even, right before we walked in, I was able to, throw on the trade, put it on there, and set some take profits on part of the positions and let the rest of them go on through. And so I was able to, do a little trade right there on my phone. Didn't have to be in front of my computer. Didn't need all the charts. Everything was very, very simple, very easy to do because I knew what was coming out, what to expect, what to look for, and I used the scanner even on my phone. I even took some of the screenshots on my phone so that way I can show you, what was going on at that time. So let's go over here. Let's check this out. Let's look at a few of these. So one of them would be the euro dollar right here. And there was a couple ways to play this, but first thing is, like I said, I pulled up the scanner. And, the scanner makes it really easy to find, potential trades. And what you simply do is, scroll down, find your instrument, and then you look for a straddle. Of course, right now to find a straddle is going to be a little more challenging because, the time of day and the markets move so much already. But there are a couple still sitting out there. There you go. There's a straddle. So pretty low risk still. Of course, not a lot of volatility left in the market after the big move that already took place. But what did I see this morning? So how did this look this morning? How did I know which spreads to pick? How did I use the scanner to do that? Well, let's go through. Let's look at the actual contract on here. And see here. Like I said, I grabbed these screenshots. I just forwarded them over to my phone. So we ought to be able to pull those up. There we go. So right here, you can see the screenshot, and this is the P&L based on if the market goes up or down, and these are all the straddles. So I just went on there and I put $100 max risk. I put 1-to-1 risk reward ratio, and instantly there's every straddle that's possible. And so as I'm looking at these trying to determine what are my choices, then I got 3 contracts right here on the buy side that would be potential trades for me. So how do I know which one? Well, first thing I'm going to look at the expiration time. You could have done the 9 a.m. The problem with the 9 a.m. one is it's expiring 30 minutes after, and I wanted to give the market some time to run. And the stats are based on 2 hours after the announcement. So usually most of that movement is going to happen in the first half hour, but sometimes they just keep going and going and going, like today. And so right there, I was like, okay, I don't want the 9 o'clock. I know it's a little bit cheaper. It's always going to be cheaper simply because it's expiring sooner. But I wanted more time. And so now I'm looking at the 10 o'clock and I'm looking at the 3 o'clock expiration. Okay? Obviously, the 3 o'clock gives me a lot more time. And I go over here, and I don't really worry about break-even distance on straddles because I'm expecting, the euro dollar to move 100 pips. And so I'm not really concerned about that at all. I'm more concerned about my risk. When I look at my risk, I see, I can get the 3 o'clock for another $1. So $23 risk on the 10 a.m. I can literally have 5 more hours for my trade to play out if it takes a while for it to move for only another $1 in risk on the buy side. So that made my choice really easy. And so I went ahead and I chose the 3 p.m. right there. And then the other one now is to look at the sell side because I'm going to buy and I'm going to sell. So again, just went ahead and ignored the 9 o'clocks. Again, they're cheaper, but I expect a massive move. So in this case, I basically would say I'd rather put up a little more money and have more time. And, especially when I expect a massive move, which we did on this trade. So I got the 10 o'clocks. Those are a possibility. And now I got to compare. Okay, that one's $45. Probably don't want that one. But right here, look at this 10 o'clock and this 3 o'clock. Both of them with only $15 risk. Okay, notice they both have the exact same ceiling, $36.70. They're both out of the money there, but they both have a $15 risk. So I'm looking at about a $40 risk on my trade to go in and put the trade on. So I did put the trade on, and we'll go over here, and let's look at sort of what that would have looked like had you had done the same trade. So that way you sort of know what to look at, and like I said, just how to put some of the pieces together on here. And let me see here. All right. So when I went in and did this trade, we got let me actually draw the boxes for you. So right here. And I bought, went in and I bought the 3 o'clock expiring spread on the euro dollar. And the contract we got right there was the 36.70 to 39.20. So like I said, just shortly before here, so 36.70, then up to 39.20. You can see it's still going, but we'll just see how high does that go. So it goes really high. It gave me a lot of, obviously one of the other big advantages, gave me a lot more profit potential. So that's one thing we didn't really talk about over here on the screenshot. When I was looking at this right here, there we go, is, look at the prop potential on this 3 o'clock versus this one. There's only a $75 prop potential here. It's a $224 prop potential. So a lot more prop potential on the 3 o'clock as well. So that was another big edge. So for $1 risk, I get a lot more profit potential and I get a lot more time. So I went in and I bought that spread. And like I said, it was good all the way until 3 o'clock. Meaning I had all that time for the market to move. And this is not an all or nothing trade. This is not like a binary. Okay, this is a spread. Your profits, the difference between where you buy and you sell. Okay, so it's not really all that complex. People tend to make it a lot more complex, but it's not really that complex. You can get into all the details, and sometimes that makes you feel like it's more complex, but really it comes down to the difference between where you buy and you sell on the trade. All right, so once we have that down, the next step is to go in and go, okay, so what is my actual risk on this trade? And you got to put each piece together. And so how do you know what your risk is? Well, your risk, whenever you do one of these trades, is going to be the difference between where you buy the spread, if you're buying, and the floor. So all you got to do is take the difference of that. And this is pretty simple. So what's cool on Nadex is every tick on Nadex is worth $1. So if there's 10 ticks or pips or whatever of difference, then that's a $10 risk. Now you can do, of course, more than one contract. You don't have to do just one, but you can do more than as many contracts as you want. But just to make it simple, doing the math on a single contract allows you to see what is the actual risk on this trade. So that's how we display it in the scanner to keep it really simple for you as well. Is it's risk on one contract. And so what was my risk when I put this trade on this morning? And I'm trying to pull up a thing for you here. I'll get this in just a second. There we go. Okay, so when I bought it, I bought the upper spread, 36.7 to 39.20. I bought it for 36.92. Okay, so if we go in here and we do just some really simple math, we go 1.3692. Okay, that's where I bought it, and the floor on the trade was 1.3670. That makes my risk on this trade was $22 on that trade when I put that on. So I got $22 risk over here. And then we'll go to the lower side. Okay. And I'll go, what was my risk on the short side? Well, when I sold that euro-dollar, the lower euro-dollar spread, I sold it for 1.3653. So 1.3653 minus 1.3670. So $17. So 17 plus 22, I had a $39 risk on the trade. Is that okay? Yeah, that's definitely okay. So why is that okay? Well, because we expected a 100 pip move on the euro dollar. And we at least expected a 50 pip move, because it literally has moved 50 pips every time the NFP has come out for the last 2 years. So if I expect at least a 100 pip move, well, I can easily make my money back on the trade. So how does that work? Okay, so what we're going to do now is let's zoom in a little bit closer. And go, okay, I get in here, what are some of the factors I need to consider on my take profit? Well, one of those, of course, would be, my expected move from high to low when the announcement comes out. So the announcement comes out right here at 8:30. And we can see how high did it go. Right there, we got, things all the way up to, 115 pips. We expect it to move, like I said, around 100 pips during that time frame. So it definitely, hit our goal. But a couple other things I need to consider. Okay, the first thing you're going to need to consider when you're looking at these trades is deviation levels. And so basically I could say there's 4 different stop methods that I'll look at on these. One of them is, and this is the most conservative method, because you pretty much almost always get at least some volatility off of specific news announcements like the ones that I talk about. And a lot of traders, and this isn't the best risk reward scenario, but they're hitting them constantly, even if it's like a lower impact announcement, is they'll go in and they'll literally go for 50%. So if they risk $39, then they're literally trying to go in and make $39. And so basically, if you risk, to make it really simple, we'll just say it was 20 pips on each side. Okay, so a $40 total risk. And so I'll talk about where they would have set their take profit, but then I'm going to go into a few of the other methods on how I let my profits run on this trade. So stay right there. We'll be back right after this.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, going back here to the Diagnostic Trading Hour. And so, just again, we're looking at this trade. We're talking about the take profits. What could you have done this morning? What would be some things that you would have needed to consider when you're looking at it? And so to do this a little more accurate, what I want to do is I want to break it down to the 1 minute bars here. And that'll let us really look in here and see this. Here we go, pulling this over. Give me 1 second to get that lined up for you. All right, so this morning we had this massive spike right here. And what I want you to notice, one of the other things I want you to notice that I think is really important that you understand is how it hit the 1 deviation level. Literally right there. Nailed the 1 deviation level before it did a pullback. So that's one of the things I will also consider when I'm looking at take profits, is I'll look at where deviations, especially like a half deviation away or a 1 deviation away if I expect a large move. Like in this case, I expected a large move. So I'll go in and I'll actually look at this one and I'll measure it from right here up to there's about 70% of the move that we're looking for on this trade. And so that's not too bad. You know, obviously we don't need to always go for the full move. So even though we may get it, we don't have to always go for it. But we do expect the market to pause and hesitate at these deviation levels. So 1, that can make it a good place to take profit. Okay? 2, it also should not surprise you. Like, especially now, if you're doing like a 9 a.m. contract, you definitely want to be taking off like right there because you're trying to get in, take your money, get out. Maybe even if you're doing 10 o'clock. Now, if you're doing, like, say, the 3 o'clock, you might have a little more patience on the trade, and that helps with the patience because you know you have more time, especially when you know you didn't really pay more money for that, and you should expect a pullback, okay? So right on up there, goes to 1, does pull back almost to a half deviation, doesn't break below it. So this might be where you want to put like sort of a stop profit. So if it did go ahead and start pulling back, that might be the place where you want to bail on the trade. And, you know, take your profit. You made a little bit or broke even at that point if it came all the way back. But since you expected the pullback at the 1 deviation, and then why would I expect the pullback? Again, it's a 1 deviation move, so it'll hit that. It'll often bounce off of it. And I also expect the market to pull back a little bit before the equity markets open when we get these kind of earlier news releases, like at 8:30. So the report came out at 8:30 Eastern time. The market pops up, hits 1 deviation, within a couple minutes, but then pulls back and sort of waits for the equity markets to get back open. The equity markets open, and then all of a sudden we get resumption of the trend. And so often what you'll see is you will see that pattern. So be aware of that pattern. Go back and look at it on some historical releases to see it. But you'll see it move in one direction, do a little bit of a pullback, and then keep going in the same direction after the equity markets open. So that was sort of my expectation on this trade. As I was looking at that, I was going for those 100 pips. It was pulling back. I was watching that half deviation level like a hawk. But it came on back, did not break it, and then kept going. And I was able to go in and pull a nice profit out of the trade. And let's see here. What was it at on the most recent? I'll show one of the screenshots here in a little bit. But, whenever you're doing this, like I said, there's a lot of ways to do it. But on the euro dollar, it's up there at, 37.84. So, $90 profit on one side, $20 loss or so on the other side. Make about $70 on a $40 risk. So not too bad. You're looking at, almost a 200% return on your investment, on your risk in a pretty short amount of time. So, within 1 day, which is insane, but also within a matter of, you made a 70% return or more right here within just a matter of a few minutes. So not bad at all. So we got one method is take it off when you make back half your risk. So if I bought for 40, I'll get out at a $40 profit. Why is that half my risk? Well, because I expect to lose $20 on the other side. So all it has to do is move up 40 pips and I'm filled, I'm done, I'm out. That'll happen a lot, okay? Because it'll move, maybe not the full move, but it'll move. Maybe jerks around or whatever. You get mixed reports. And it makes the trade very fast, very easy. You don't have to spend a lot of time watching it. You don't have to do a lot of analysis. And so that's one method. That's the most conservative method. Okay? The next method that, like I said, you want to look at is maybe a 1-to-1. Okay? Now that would be where you combine a couple numbers. One is you take the total risk, so we say $40, and then let's say there's $20 risk on the other side of the trade. Well, remember, I'm going to lose $20 on the other side. So if I want to actually make $40 net on a $40 risk, then I need to make $60 because I'm going to lose $20 on the sold spread. Remember, because I don't care what direction it goes, but of course I got to pay for both sides to be able to take participation in either direction. So I'll take profit 60 pips higher, which of course, as we know, would have worked out as well on this trade. So method 1, 50%. Method 2, 1-to-1. Method 3, deviations. So stay right there. We'll come back. We'll talk about a couple other methods as well.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Wednesday, October 30th at 6:30 p.m., Andy Hecht has a special live online workshop for his subscribers to his weekly newsletter, the Technomental Commodity Report, called A Roadmap That All Investors Should Use, But Most Don't. During this hour-long live webinar, Andy will teach you how to use free and readily available market data to calculate the future expected price range for any asset. It's a simple yet powerful method that every investor should have in their toolbox. The best part is that you can attend this live online workshop, which will be archived, by simply signing up for a 30-day free trial to Andy's newsletter, the Technomental Commodity Report. And this is the last month to lock in the low introductory rate of only $39 a month. This price will be going up by over 25% come November, so now is the perfect time to get in on the action. Sign up for your 30-day free trial to the Technomental Commodity Report today by visiting the front page of TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
All right, folks, come on back here to the Diagnostic Trading Hour. So we got this chart up right here of the euro dollar. We're going through the spread step by step for you. And so on that chart right there, you can see, so we talked about, again, I want to recap this for you. We had basically $20 risk on both sides. We talked about one take profit method was going in and basically just going for 40 pips of profit. Okay, which means you're going to lose 20 bucks on this side. You net 20 pips on a $40 risk. The other one would be to actually go for a 1-to-1 risk reward. And so a little bit more moderate. And on that one, what you're doing is you go, okay, what's my total risk? 40 bucks. I expect to lose on one side. So let's say the other side has a risk of $20. Then I need to make 60 bucks. So if it goes up, I need to make 60 pips. If it goes down, I need to make 60 pips. The market went up over 70 pips. You easily could have taken that 1-to-1. Now that 1-to-1 also coincided with a deviation level. So a deviation level is another place where you may decide to go ahead and take profit, especially if you see it do any kind of pullback on that. So that's the third one. Now the other one is I'll look at the markets, see how they're going, and I'll go, okay, well, what is my expected move? Okay, my expected move on this trade. How far do I think it's actually going to go? And I pull all these stats up, try to make sure, they're as accurate as we can get them. So that way we can have at least a proper expectation of how far the market has moved on average. Obviously, it doesn't mean it's how far it will move, but how far it has moved. So that way we can go in and have a trading plan. Plan your trade and trade your plan type thing. So this morning, what did we have? What was our details? Well, on the euro dollar, we had an expectation that it'd move 100 pips within 2 hours of the announcement. Well, did it? Let's check it. Let's go in here. Let's zoom back in on it and go, okay, well, the announcement came out right here. So, and then we go over here. They go to 10:30. Okay, to actually get a full 2 hours. What's the highest price up here? Basically got right, look at that, right on the dot, 100 pips. Maybe actually a little more if I got right into it. So 100 pips. That was our expectation on the euro dollar. So that's another level where you could take profit. Okay, so you'd have to hold on a little longer. You need to have a longer-term expiration if you're going for that max profit. And it's a little more nerve-wracking because you'll see, you have this massive profit, and then you'll see it go away. I mean, I was up $400, and then all of a sudden it came down. I was only up like 190, but then it goes back up, and, I'm up over 600 by the time I end up getting out of the trade. So, it can be a little nerve-wracking while you're watching that. So, we're watching these different trades move. So right here, so you get out of that trade, but then, do you get out right away? Well, remember, one of the methods that I like to use is I'll go over and I'll use the deviation levels. So on the deviation levels, I'll watch them and I'll look at, as each level's hit. So even though right here was the 100 pips, I can go ahead, I'm going to go ahead and tighten up my stop, maybe like 5 ticks below that bar, and then I wait for it to close above a deviation level. So we keep closing right there. We close at 37.84. So I go in, I tighten my stop a little bit more. It comes back down below it, goes back above it. I tighten it up again. Goes down below it, goes back above it. I tighten it up again. And eventually I'm just like, you know what? We're pretty much, I think, exhausted on the day. We got a nice profit. Let's go ahead and, cut the trade. And so end up exiting right around 37.84. So not bad, and really not much has happened since then. May have gave up a little bit of profit. We'll see here. There's only an hour and a half left to go. But pretty much maxed that trade out. Got a full deviation and a half move. You cannot complain about that at all. So a lot of different ways to trail your stops, depending on how conservative or aggressive you want to be. And, one of the methods that I know that I'll use on a lot of trades, like I did this on Google the other day where I layered it in, is I'll put the trade on, I'll take off profit at a certain level, like say a 1 deviation point, and that gave me, a 1-to-1 risk reward. So I've covered all my risk, and I can take off half. So now the other half of risk is now at least, covered, meaning I won't have less money if that trade just lost everything, which, it's hard on the spread to lose everything because it has to expire like right at the exact ceiling and floor. Like the euro dollar would have to expire right here for you to lose everything on the trade. So if you're anything above or below that, then you'll have less than your total loss, max loss there. So, but by doing that, I basically ensure that at this point, I can't end with less than I started with, and it gives you a little more comfort on letting the other ones run. Also, I'll do it on multiple currency pairs, and I'll close them out. And so, I get a euro dollar. I also went and I did pound dollar. Okay, and on pound dollar, we can see it. I mean, it had a pretty massive move right there, and it's still pushing on up. But if we go and we measure, the move on the pound dollar, we got to move right here from the low, and then we go over here to the 10:30 high, which is pretty much at 10:30. I'm just trying to look at, the 2 hours after. We got 90 pips. Pound dollar usually moves more. It usually moves about 105 pips on the NFP from low to high. So we actually didn't get that full big, normal move within 2 hours, but we got pretty close to it. And we got right up here. We were at 0.5. We're at 0.7, almost at 1. But remember, if you're looking at the other pairs, you'll actually see a lot of them did hit the 1 deviation, like euro dollar hit that 1 deviation. So on this trade, pound dollar was actually among the riskiest ones to do. So I went on that one. I bought it for, let's see, if I go in, and this is just the ones I had open when I took this. But 61.61, so I had $31. So 61.61 minus 61.30. I had $31 of risk right there. And then up here, 61.06, and then minus 61.30, so $24 of risk. So I had about $54 of risk on this trade. And so pound dollar actually had more volatility, implied volatility built into it than the other contracts. And I paid a little bit more for that trade. So, that may not have, if that's the one you did, that may not have been the best one. And again, what I was able to do, and I did this again on my mobile phone on the scanner, okay, is I just pulled up the scanner, I selected my instruments right there in my browser, and, right at my daughter's school, and I look at them and I click, okay? Made it very simple, and I had to hop over the Nadex app to place the orders. But again, it makes it really simple because I went up here, put in my stuff, and I just scrolled down and found the right contracts to make sure I had the best ones. Otherwise, I would have been trying to click between 9 o'clock, 10 o'clock, and 3 o'clock, and trying to find the best ones. And honestly, I didn't have the time. I wanted to put these on, and I did it in a matter of maybe a minute at most. I put all 3 trades on, and I didn't want to spend time doing it. I wanted to focus on my kids, the things that matter to me, not on trading. And but I had to buy those books at the book sale, so had to have a trade or two on there. So we put that on. Of course, my daughter was helping me. She thought it was really cool. She loves helping me trade. And but we go in there, we put them on, and we're done. And things over. I get out. She's going to school. And I'm monitoring the trades. This one had a pretty big pullback. So I only had one contract I left on here. It went in. It took profit. But then it kept going. I had one contract left. It just kept going. Boom, one deviation. That method we just talked about. 5-tick trailing stops. This over here closes below it, closes above it again. You tighten that stop up again. We're over here about 62.18, going back up, and then at a certain point I'm like, I'm just going to close everything out. So we have a nice profit at this point, and so I just locked in the profit on the trade. And on that one, it made just above a 1-to-1. Wasn't the biggest one out of the profit group, but it was above 1-to-1, so that's good. Now my favorite one, and I said this yesterday on the show if you were able to tune in, and I said my favorite pair for this trade is the dollar franc. It usually has the most volatility overall, and doesn't mean it's going to have it, but it has. And it also usually has a cheaper cost. Okay? So we went in on the dollar franc, and of course, we were able to take the profits on the euro dollar, pound dollar first, and so that took off pressure. And I left the dollar franc one on. And let's check out, what kind of volatility it has right now. We'll just check it from high to low at the moment. We're right there. So we got about 100 pips. So we actually haven't exceeded. It didn't have the most volatility today. Usually it does. So it's one of the most volatile on the NFP report. Obviously not out of all the currencies, but on this report. But it's so overlooked that often it's cheaper. Okay? And so I go in here. And what spreads did I buy? Well, I went in, and let's look at them. We'll draw them on the chart just like we did on the euro dollar here and see how it all comes out. So I went in, and I bought the, 90.30 to 92.30. Okay, so right when the market was up here before the announcement, got the 90.30, and we'd have to take this way up here to 92.30. Look at how we're even pushing, past the 3 deviation level on that. And then I went in and I sold the 92.30 down to 90.30. So 88.30. There we go. So that doesn't line up. There we go. So 88.30. And again, I had till, 3 o'clock for these things to expire. So we had plenty of time for this trade to play out. And when I was looking at them, I was sort of shocked. I did not expect to see, what I saw when I was looking at them on the scanner. I expected, to be looking at, the 10 o'clocks, maybe the 9 o'clocks if I had to. But if we look at this, what you'll see right here, and there we go, is we got these right here, $18 for the 10 a.m., $19 for the 3 p.m. We got $16 for the 10 a.m. and $17 for the 3 p.m. So for another $1, similar to the euro dollar, right, I was able to buy myself 5 more hours of time and significantly more profit potential, 181 pips versus 82, 179 versus 80. So without looking at that, with just making an assumption, wanting to get it on fast, I don't tell people go, well, I just don't have time to go and look at all that. And I'm like, well, you're costing yourself money, you're costing yourself time, and really this doesn't take any time. I did this on a phone in less than 60 seconds. I just pulled it up, boom, looked at it. I'm like, wow, those are the same risk. Okay, well, I'll go ahead and I'll just take that trade right there. So I went in, and I chose that one, and I went a little bit lower here, and I chose this one. And that gave me maximum, like I said, maximum profit potential with maximum time for only an additional $2 total risk on my trade. And so I bought the 90.30, 92.30. I sold the 88.30 at 90.30. And the fill price, let's see that we got on those over here, was the 90. 830 that we bought. I was able to get into that one for $90.48. So I had $18 of risk on the one I bought. Okay, and we can make it a little more viewable here. We can look at this. And then if I go into the one that I sold, the one below it here, I was able to sell that one for $90.14. The selling was $90.30. So $90.30 minus $90.14 is $16. So for $16 in risk. So I had $34 risk. So I had less risk than the euro dollar. I had less risk than the pound dollar. I also had one of the most volatile currency pairs. I had till 3 o'clock for the market to move. Really, as long as it moved 30 pips up or down, I was fine. Okay, and if I was able to make 34 pips, I'd have to make 50%. If I was able to make 34 pips plus the other side, so if I made $34 plus, what is that? I don't know, 17 bucks right there, then I would have made my 1-to-1. If it gets all the way to deviation, make even more. So it's a great trade, had lower risk, had plenty of time, and worked out great. Held on to this one for quite a while, so it's the one I stayed in for the longest period of time. And you can see it came on down here to this 1.5 deviation level, and that's pretty much where and I saw this sort of bouncing off that. And I'm like, all right, it's probably time to go ahead and jet on this one. So right around 89.47, hopped on out of the trade, and locked in, like I said, over 600 in profit on that one. On one side. So if we take the one side of 670, okay, and then on the other side, if we were risking $18 times 10, that's 180, so minus 180, we made $490 on the trade. And so on a $360 risk, so about 150%, close to 150% return on the trade. And just, not a bad trade at all. Very simple, very planned out, very methodical, and, just there's so many ways you could have done it, but that was the simplest, easiest way. Just put on a straddle, and, you could just set your 1-to-1 risk-reward ratio. You could set your 0.5-to-1 risk-to-reward ratio, or, reward-to-risk ratio, or you could go in and get out when it hits the deviation. As you notice, it hit one deviation perfectly, bounced right off that, then it'll pull back down to 1.5. You could also exit, like, say, when it touches the 1.5, like it just recently, just now, was down here and hit the 1.5 deviation level. So just touched on it. So that could be another move that you could look at, or you could wait until it gets down, 105 pips from high to low. So, like I said, if we got specific on the measurements, right here at 830, take that right here, we got 96 pips. Now the expectation, the normal move, and I usually don't go for the entire normal move. That's the average move. That means that there's going to be ones that are 50 pips greater and ones that are 50 pips less. It's the average, right? So on the U.S. franc, the move that we're expecting was 110. So we're about 14 pips off of that. So if you wanted to hold out for another $10, I guess you could. But I definitely would be looking at locking in some profits, or at least tightening those stops if you haven't already. All right, stay right there. When we come back, we'll talk about the report coming up tonight, where you could do this as well on an Aussie report. Stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on parts, plus a 64% on rest. And Hertz Global as a core position for 6 months before exiting the position. A current position, entered as a turnaround company with good technicals based on Basil's waveform, is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to the Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to the Opening Call, just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN.
TFNN has just announced a special sale for 2 weeks only for the Gold Report. To celebrate the 600th weekly issue of Tom O'Brien's Gold Report being published on October 22nd, TFNN is having a special one-time sale. From now until October 22nd only, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, which is almost half off the regular monthly price. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Take advantage of this one-time special offer and pay only $600 for 60 weeks of the Gold Report. This offer is valid for current or new subscribers. Everyone is welcome to take part in this special promotion as we celebrate the 600th weekly issue of the Gold Report. All the details are on the front page of TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, welcome back here to the Diagnostic Trading Hour. I got a quick call coming in. We've got Rob from Orlando. Rob, how you doing, man?
Hey, Darrell. Thank you for explaining everything. It's very, you're very straightforward, and I appreciate that. I have just one question. When you say you use your phone, which smartphone are you using? Can I use my iPhone?
Yeah, I have a iPhone, and then I actually just switched over to Galaxy Note 3.
When I log into the Nadex, it doesn't work for me on the iPhone for Safari, nor the what do you call it? The other one, the Google one.
Download the Nadex app. They have an application that you can download and you can trade on. Are you there? Did I lose you? All right, I think I lost him. What you want to do is you actually want to download the Nadex app on your iPhone, and it's very easy to use, very simple. I even have a trade, right there, mobile trading. There we go. So there's an iPhone, Windows Phone, and Android app. You can download that, and you'll be able to place your trades on it. So pretty simple to use. But yeah, download that. You'll be good. I actually am able to log in and place trades inside of Nadex. I use a Chrome browser myself. I don't use the Safari browsers or generic browsers. I prefer Chrome browsers on everything. But I I usually don't ever log into the Nadex platform. I'll just, like I said, log into the Nadex application itself. So, anyways, if you have any more questions about that, give me a call back. Let's check out real quick. We have one report coming out this evening. Talk about that real quick. Let's see. We got the Aussie dollar CPI number is coming out. Okay, that's going to be released at 9:30 tonight, and we're going to be looking probably for a 10 o'clock or an 11 o'clock spread. The 11 o'clock spread start trading at 6. There'll be another 11 o'clock spread start at 9. So basically, you have at 6 you could start. At 8 there'll be a 10 o'clock spread. At 9 there'll be an 11 o'clock spread. Obviously, the longer you wait, the cheaper it is because premium gets taken out. But in the last, maybe 10 to 20 minutes before a news announcement comes out, they get a little more expensive as premium gets pumped in to the options there. So be aware of that. And so looking at, again, doing the same thing we're talking about right here, doing a straddle on the Aussie. So if we go in on the Aussie there, what are the stats you need to know? Well, 75% of the time it moves more than 50 pips, but it has an average move of 50 pips, okay? Which means that, when it does move, it moves a lot, but when it doesn't move at all. It'll move like, say, 25 or something, okay? And you just want to be aware of that because that brings that stat down a little bit. So I'm going to be pretty strict on, 50 pips at most on this trade. I'm not going to be looking for more, and I will most likely be targeting the half, maybe 1-to-1. We'll see what it does like in the first couple minutes, but I'll probably target more the half to 1 risk to reward ratio on this trade. So again, the 75% of the time it breaks 50 pips, but the average move of all is actually 50. So I know that sounds weird, but if you think about it, if you have 60, 60, 60, but then you have some that are like 10, 10, 10, it can really bring that average down. So what we'll be looking again is the Aussie dollar CPI report. There's a lot of websites out there, Forex Factory, investing.com, etc., where they list them all for you. And the number expected tonight is 0.8%. Now, if we get like a 1.1, the Aussie should fly. Okay, if we get a 0.5, the Aussie should just drop like a brick. Okay, so that's where I'll definitely be sort of watching. If I see that number come in at 1.1 or 0.5, then I'm going to be expecting a larger move, and I'll hold on a little bit longer. Okay, and I usually do straddles on these. I don't usually do strangles. So straddles being spread, strangles being binaries. I'm going to look at the straddles. All right. Well, if y'all have any questions, let me know and call in. Otherwise, I'll see you tomorrow right here on the Diagnostic Trading Hour.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve. Yet, you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.